Hello out there and good morning traders. Welcome to the Apteros Daily Market Insight. It is June 24th, 2024. Let's dive into our recap here. So a pretty straightforward session for us. We were mentioning how in the DMI we were really looking at a more rotational, shorter time frame, shorter context, and that's exactly what we ended up seeing out of our market on Friday, the 21st. Our bullish line in the sand area had, opportunities from the lows there. Not so much this one because this is more or less the overnight for today. But really, you had coming into the open was the low of day. That grind all the way to the top there set the high of day in terms of the RTH session. And from there, it was mainly just sticking with the same narrative inside of scenario one, which was, an expectation to possibly head up into this bearish zone. We just never were able to clear out the neutral area. So we were still more bullish than bearish overall at the lows. It just didn't end up releasing into the main target area across into the bearish zone there. So kind of staying a little bit more tight in its rotational nature. In terms of the opportunities, the real opportunities were coming from these lows here and this low here. If you were maintaining that rotational outlook, main target area here, and then getting close to that again, coming into the close there, but no real opportunity to kind of get into that neutral zone again and possibly see a push to the upside any further. So that was really the recap from Friday. As far as I'm concerned, whenever you nail low a day, high a day off of some references in terms of the RTA session, that's a real win in general for your prep and your DMI. So let's take a look at what's going on today and see if we can reproduce this again today. Believe it or not, a fairly similar picture to what we had going on Friday here. We're still in that rotational context overall. That's where this is. On the shorter time frame, we do have some intermediate stuff to watch out for in the neutral territory of things. And then, of course, we have our value area from yesterday as well, kind of acting like a guide for what's happening here on the ES today. So let's talk about some of the scenarios here. The main scenario really is based on this line in the sand down below here, in which we have a more bullish scenario if we hold it up with scenario one. If we break it down, we're looking at a more bearish scenario into scenario two. Now, with scenario one, there's some things we can pay attention to for, let's call it health, or let's call it a better contextual circumstance. If we hold above this particular neutral reference, that gives us more of a structural perspective in terms of yesterday's or Friday's value to the upside. So that would be more of a continuation type of thing for scenario one in terms of continuing up into this main neutral area here. If we clear out that particular neutral area, it's a little bit more open and clear up into this bearish area. Now, this bearish area is a single reference type of situation, but it is the driving rotational picture that I mentioned on the shorter time frame. So this is a destination, but also an area that is a main hurdle to the upside. So if we continue to push up into this particular bearish area here, that's where we would expect something to slow down a little bit in terms of our analysis. Not anticipating. Our analysis says that this is an area here that is a main destination, but also a spot for bearishness if possible. If we break that out and continue from there, then we start getting into an imbalance. We start seeing things shifting on our lower time frames, much more bullish in general out into this possible neutral level out there. So that's really the main plan. Now, the reason why I went over this bigger stretch is because this would be something that might develop over a 2-day period, maybe even a 3, if the market gets really bullish. So the expectation for today in terms of like main targeting and all that kind of stuff, if we hold above this neutral reference, definitely into this area here and then this area here would be the two main targets. If we don't hold above this, then we're going to stick inside of this zone here, possibly building out some value, maybe not really doing much, but possibly, that is a target area as long as we're still in scenario one overall there. If scenario one breaks down, we end up into scenario two, that would be some shifting information on our lower time frames, but also we'd be seeing some pressure on multiple time frames to the downside. Now, on Friday and days before that, I've been talking about the risk reward landscape, and the risk reward landscape is better on the higher time frames to the downside. So if we start seeing shifts and we start seeing setups underneath our line in the sand, the downside has a little bit more open space whenever it comes to the risk reward landscape in our multiple time frame analysis. So that's something that I'm paying attention to. I'm not anticipating it. Like I said, I'm not predicting it. This is just our what is picture being approached from, okay, what happens if we stay bullish based on where we currently are in the what is picture? And what if that what is picture shifts and we end up going bearish? what does that look like for us in terms of the trade location and the overall landscape of the market? So that's really all I'm discussing here. I'm not anticipating one side being weaker than the other today. This is a good line in the sand. It has price confluence. It has bias confluence. The recency is pretty good here. It's maintaining this zone a little bit. We have established excess at the lows here. If we do end up seeing something push below these areas here, definitely be mindful of like a little bit of a stop run and then a possible return into there. But other than that, if this bullish area breaks down, we're looking at this first neutral target here as the main target for that breakdown. And then if we get inside that neutral area, there's a further target down here at 83s to really pay attention to as well. That's pretty much it from our line in the sand and our DMI perspective. Trade well out there, mind your risk, and let's get after it.